Now then, let's move on to the business of oil, at least within the context of East Africa. The cost of the East African crude oil pipeline project seems to have gone up by around 30% to roughly $5 billion. Now, this comes after the withdrawal by risk-averse lenders. It essentially now means that shareholders will have to dig deeper into their coffers in order to fund the pipeline's construction. Total Energy shareholders raised this question, in fact, during an AGM meeting back in May. And company executives confirmed that increase in cost around $5 billion for fully completed projects. $2 billion of that is supposed to be financed through shareholders' equity. Another $3 billion, however, would have to be raised in external debt financing. Now, the new cost is a significant jump from the previous figure of an estimated $3.5 billion that will be required which required project sponsors and shareholders rather to raise $2.5 billion in debt and another $1 billion through equity. All right, then, so let's explore the latest developments in the construction of what ideally on paper would be the longest heated crude oil pipeline in the world, running from Hoima in western Uganda to exit at Tanga on the Indian Ocean. Ken Gishinga is the CEO and chief economist at Mentoria Economics, who joins us now live on the program. Ken, so in April, the estimated cost of this pipeline was $3.5 billion. Now we're seeing that the project cost has gone up to around $5.1 billion. Do we know where the extra money is coming from?
Well, many thanks, Rama. Indeed, this is a project that President Museveni had said will propel Uganda to become a middle-income country. But that said, what is emerging is this 1,440-kilometer pipeline is turning out to be an investment risk, an environmental hazard, and just a lot of financiers appear to be walking out of it. So I think that lack of project sponsors means they might have to get sufficiently more liquidity domestically.
Given the area you operate in, within the bounds of corporate finance, is this essentially one of those, for lack of a better word, is this a stranded asset now? Is this something that individuals with private capital are willing to put money into?
Well, it's interesting you use that phrase because in corporate finance circles, that's what this project is turning out to be. Not only is the oil prices fluctuating, but also the world appears to be moving away from oil. You know, there's a significant investment in renewable energy. So I think no matter how you look at the mathematics, it's still not adding up. But then you add up all those environmental costs that come up when you displace 14,000 households. And most companies, most commercial banks saying this just doesn't add up to their climate objectives.
Not to mention all the legal risk that comes into potential litigation. So let's get back to something you mentioned, because it looks increasingly likely that most of the large commercial banks that could provide this kind of debt financing, they're not willing to do it. But can Uganda and Tanzania take on that $5 billion debt on their public balance sheets?
Well, if this was 2 years ago, you could have said maybe, but what COVID has done to public sector budgets has been disastrous, where governments are not able to raise sufficient revenue to be able to finance the existing debt. So I think any form of trying to extend these external commitments, I think will be frowned upon, and will not be easy to be able to get them.
Okay, so one last question for you, Ken. So because Total's estimating that between I believe it's 200 wells are going to drill for oil, another 200 for water injection, plus the pipeline, the gas-fed power plants, they're assuming that this whole thing is going to produce around 1 million tons of CO2. So if they say, hang on, we can probably offset some of these emissions, might that make this project more investable?
Well, as I said, in terms of really where they plan to export this oil, some of those destinations are moving away from fossil fuels. And a lot of the international financiers, for example, the UK Export Finance, are not willing to finance any fossil fuel projects. But I think the broader picture will really be around how does these countries move forward in terms of a project that has a significant negative backlash, and really the case for it, in as much as they say it will create 10,000 jobs, the fact that it's going to displace 14,000 households seems almost to be a zero-sum game.
Indeed. We'll have to leave it there for the time being. Ken Gishinga from Matoria Economics, thank you very much for your time this evening.